Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into DEXCOM's proxy statement. Think of it as their homework assignment to shareholders, but trust me, there are some interesting bits hidden inside, like executive pay and a few potential shareholder headaches. First off, a quick summary. DEXCOM, as you probably know, makes continuous glucose monitoring systems. This proxy statement is essentially them asking shareholders to vote on some key issues, like who gets to be on the board and how much those board members get paid. It's more than just names and numbers. There's a story here about the company's governance, its pay structure, and ultimately its future. DEXCOM is big on empowering people. Their revenue hit $4.03 billion, which is up 11% from last year. Not bad at all. I find it interesting that despite the increase of revenue by 11%, net income only rose by 6%, which means that costs are going up faster than they are earning more. I can only hope they keep costs in check. The president thanks the stockholders and reports some of the business and financial highlights from 2024. They also launched a couple of new products, including Stelo, the first over-the-counter glucose biosensor in the US. This is a big move as it opens up DEXCOM's tech to a whole new market. They also pushed DEXCOM ONE Plus internationally. Always good to diversify. Here's where things get interesting because this is where we start to see who's actually steering the ship. The main task for the shareholders is to vote on who will be on the board of directors, and it is important because the board makes all the big decisions. The board recommends voting for all their nominees, which you would expect they would recommend to vote for them. The document then highlights the experience of its nominees, emphasizing the independence of most of them and the balanced tenure. They also try to make themselves seem diversified. I will always say, however, that experience is important, but not always indicative of good decision making. Governance is a big deal for companies, and the proxy statement touches on theirs, which shows their commitment to doing things right, or at least looking like they are. There are all the things that they do, such as enabling stockholders to amend bylaws by majority vote, to what they don't do, such as pledging or hedging of company securities. There are a lot of rules, so I will skip to the important stuff. The proxy highlights that a majority of their board members are independent, and this means that they are not employees of the company. This is to ensure that they can give unbiased advice. There are 4 key committees: the Audit, Compensation, Nominating and Governance, and Technology Committee. Each committee has a different function and has independent members. Quite a lot of these people sit on multiple committees, which could present a conflict of interest, but who am I to judge? Now to the compensation of the directors. For serving on the board, members such as Stephen Altman received 341,075 bonds and 75 bods for the year. Not bad for a side gig. Mark Folletta, as lead independent director, got even more, clocking in at $398,666. No need to feel too bad for them. It's all in stock awards, so their wallets are tied to the success of DEXCOM. Next up, ratifying the accounting firm. It's about approving who keeps their books in order, and for 2025 they want to replace Ernst & Young LLP with Deloitte. For they do go on to mention that with Ernst & Young there were no disagreements on accounting, financial statements, etc. It could be simply that DEXCOM wanted to change things up with Deloitte. It cost DEXCOM $4.7 million in 2024 for Ernst & Young services, most of it for audit fees. I wonder if Deloitte gave them a discount. Now for the fun part, executive compensation. Shareholders get a non-binding advisory vote on whether they think the executives are getting paid too much, too little, or just right, or say on pay. A whopping 90% voted in favor of the compensation for the big guys. Shows shareholders were happy. The executives get salary, bonuses, and stock options. It's all tied to the success of DEXCOM, at least in theory. Let's see if their pay reflects DEXCOM's performance. Kevin Sayer as CEO received $15.8 million in total compensation in 2024. Jerry Sylvain, the CFO, made a respectable $5.8 million. What is interesting is that a lot of it is in stock rewards, which means that it's not cash, and it depends on the stock's performance, so the real compensation can actually be much higher or lower. The good part is that they're incentivized to be aligned with the shareholders, since what is good for the stock is good for their paycheck. DEXCOM does have a clawback policy, which means if any executives mess up so bad that they need to restate their earnings, they have to give back some of that money. They want to increase the number of shares for the 2015 Equity Incentive Plan. This would allow them to continue attracting, retaining, and motivating employees with stock-based compensation. If they don't get approved, it could make it harder to keep good people around. Shareholders should pay close attention to these and see how it would affect them, since it's dilution of shares, but often necessary to keep workers happy. Through this plan, Kevin Sayer was granted 2,700 restricted stock units, or RSUs, so I guess that is what incentivizes him to keep up the hard work. Lastly, DEXCOM wants to increase the shares in the employee stock purchase plan. This is usually a pretty good deal for the employees, allowing them to buy the company stock at a discount. So if you want happy workers, this is usually something to approve of. Besides the executives mentioned, Michael Brown is the Chief Legal Officer and Jacob Leach is the Chief Operating Officer. Both are important for the company to run, but maybe not worth a discussion. The Compensation Committee does yearly reviews to determine the risks, and they say that they are good. Always nice to have a third party saying that you are doing great. Again, to make sure our CEO is aligned with the success of the company, he is required to own 6 times his annual salary and the other executives 3 times their annual salary, and they comply with the guidelines. This is always great for the stockholders. Finally, the directors say they know of no other matters that will be presented to the meeting. We always know that's true. Now, for my thoughts on DEXCOM, DEXCOM is in a good position. Their sales are climbing and people need their products. But costs are a bit of a concern. They need to keep an eye on those expenses. Also, the market for glucose monitoring is getting more crowded and they are going to have a run for their money. It will be interesting to see if the new products can make up for the money lost to competitors. DEXCOM has to walk a fine line. Keep the money flowing, the customers happy, all while making sure the big guys get paid and keep their stock values up. Easy, right? In conclusion, DEXCOM is in a growing market, but needs to manage risk and competition effectively to maintain its leading position. That's it for today's corporate deep dive. If you enjoyed, be sure to hit that like button, drop a comment with your thoughts, and subscribe for more dissections of the corporate world. See you next time.